Good afternoon, good morning, wherever you're watching this video. I'm so happy to be here. Wow. Today, we'll be taking a very important topic. This is our part 6 of accounting for beginners. If you're a returning subscriber, I welcome you. And if you're a new subscriber, you're welcome to the family. In this channel, we teach everything accounting in a very simplified manner so that you, as an accounting student or a lover of accounting, will find it very easy to understand how to prepare your books of accounts. Accounting for beginners is all about accounting. We create ways to make accounting enjoyable and very, very simplified so that you find the topic quite interesting. Now, today we'll be continuing from our previous class. If you've not watched my previous video, please kindly check out the previous video so that you can follow through and understand what we have for today. Now, today we'll be talking about the classes of assets, liabilities, and we'll be explaining what they are so that we can apply them properly when preparing our accounts. Now, in our last class, we talked about journal entry. And like I said earlier on, or rather in that video, is one of the first books where you record your journal entries in a very simplified manner using both debit entry and credit entry recording with a very short narration. So today we're talking about the classes of assets that we have and liabilities that we have. And so, therefore, at the end of today, you would know which items are asset item, which items are liabilities item, and then because you know them, liability, you would know where to post it, whether it's supposed to be a debit entry or a credit entry recording, and vice versa in terms of increase or decrease. Kindly watch my previous video. We've not gone very far so that you can flow with today's class. Now, I said that assets are earlier on, but I'll give you a better definition to make it a lot more easier. Now, assets are five things. Assets are, first of all, they are resources. They are controlled. They are controlled and owned by the business owner. They are of value. And lastly, they are used so that you can gain additional economic benefits. When I say economic benefit, I mean cash. These are the five characteristics of an asset. One, two, three, four, five. They are resources, first of all. They are controlled, they are owned by the owner of the business, they are valued, and they are used to gain additional economic benefits. They are resources, meaning they are things that are important to you. They are things you're going to use. When something is a resource, it's something that is of benefit, and you're going to use that thing that is of benefit to also get more money. That is why they are of value. Are we together? You can only get benefits from something that is of value. You can only use something that has benefits to be able to gain additional benefits, additional economic benefits, additional cash benefits. That is what a that's what an asset is. It is also controlled by the owner of the business. So whoever is the owner of the business, whatever it is that you have, and you're the owner of that business, and that thing belongs to you, you have control over it, and it belongs to you, and you use it to also get economic benefits. That is what an asset. Are we together? A typical example of an asset is, for instance, a car. If you have a car, let me bring it down to our layman understanding. A woman, for instance, most times when men want to get married, they go and look for a woman that is of high value. They don't just pick any woman on the street. They will do their research, they will make their inquiries, they will ask questions about the woman they want to marry. Where is she from? What can she do? Which school did she go to? All those information the man is asking about. He's trying to know whether this woman I'm going to marry, whether she is of value. A lady that, for instance, went to Queen's College of Lagos, Yaba, and someone that went to maybe another school that is not so known in Lagos, for instance. The man I prefer to marry a lady that went to Queen's College. Why? Because ladies that go to Queen's College, from my own experience, most of them I know them, they are of high character, they are very intelligent, and because of that, most men would rather marry such women. I'm not saying that other ladies that went to other schools are not of high character, but I'm using Queen's College just for us to understand the idea of value. Most people, when they want to put their children in school, they put their children in schools that will add value to their children's life. They will ask questions. Ah, those that wrote WAEC last year, how many passed? How many got not just passed? How many had A's in subjects like mathematics, further maths, economics, biology? They want to know whether that school is going to add value to their child, whether at the end of the day their child will be able to possess those characters that the school have exhibited in the previous students. So that is what an asset is. An asset is something that, first of all, belongs to the owner of the business. It must be of high value. It must have some benefits and can be used to gain benefits. And then you, as the owner of the business, you're going to have control over it and it's going to belong to you. If it doesn't belong to you, then it's not an asset. Are we together? So, whatever it is you look at, for instance, and it doesn't fit into any of these five characteristics, it is not an asset. An asset has all these characteristics, all of them. You must have control over it. So, you first of all, you as the business owner, you're going to purchase it. So, going back to the instance of a man picking a wife to marry, a man wants to marry a woman of high value. You will first of all make inquiries. Where is she from? Can she cook? Depending on what the man wants in a woman. The man that wants a woman that can cook a particular kind of food, you will ask questions about that woman without her even knowing. And then if you find that that woman meet the characteristic that he wants, the woman is of value in terms of what he considers value. Maybe cooking is one, maybe a woman of good character, a woman that fears God. All these are characteristics that he's looking out for. All these are indicators of value for him, for a woman. You will marry that woman with the intention that, yes, having married this woman with this character, she's going to add value to me as a husband. She will bring value to our home. She will add value to the children. She will add value in the lives of his family members. In the Nigerian culture, when you marry her, you're not just marrying her for yourself. Your family members, by extension, have married her. So a man wants a woman that will add value to his life, the life of his intended children, the life of his extended family at large. Is the woman a working class lady, for instance? Even if she's not working class, does she have something she can bring to the table? Are we together? So that is what an asset is. Anything that adds value to you is an asset. And anything that you also control and you have ownership is also making it an asset. So these are the characteristics of an asset. The fact that it has value is not just doesn't qualify to be an asset. It must have value, it must have the capability to bring more economic value, that is more cash into your business. It must have the ability that you, as the owner of the business, you control it. Meaning you can decide and say, today, for instance, you will not do this or you will not do that. The sense of some evil men that are very, very autocratic in their ruling as husbands. Some can say their wives will not go to work. That might be their own policy. And that can only stand right because he has married the woman. And if the woman agrees that, yes, I don't want to work, or if perhaps he told her ab initio that if I marry you, you will not work, Now he's able to say that because he wants to access, he wants to control, and that woman will now belong to him. He can now give directive and said, "Woman, you would not work." If that is his criteria, for instance, I'm not a man. Some men might want that for reasons best known to them. That is not the topic for discussion. Our topic is trying to explain how control comes about. So when a man, for instance, says his wife would not work, or for instance says you cannot do certain thing as my wife, for instance, he's able to say that because he has possessed that woman by virtue of having paid her dowry and married her. So he has authority and can control and can say what would happen in her life and what would not happen in her life in instances of say you will not work, for instance, or say you will not do this kind of job, for instance. So that is control. Control, for you to have control over something, you must own it. So first of all, an asset is only yours when it belongs to you. And something belongs to you when you have control over it. You have purchased it. So you're the owner and you have control. And then that is of value and it can yield you future economic benefits. That is what makes an asset an asset. Hope we understand what an asset is. Now, there are two classes of assets: current assets and non current assets. Let me write that down. So, we have two basic classes of assets: we have current and then we have non current assets. Now, asset is said to be current when it can be converted into cash within the next 12 months, meaning you can change it from whatever it is and it gives you cash within a 12-month span. That is what makes an asset a current asset. Current is happening now. And in accounting, doesn't just mean it's happening now, but something that you can convert to cash between 1 to 12 months is a current asset. Say, for instance, your stock. When you buy your inventory, when you buy your goods, let's say you want to start selling provision, and then you have things like Milo you have purchased and milk you have purchased. You hope that in the course of a month or two, you're able to sell the Milo and milk that you have purchased. Now they will convert from being Milo and milk to giving you cash. They will not just be as Milo and milk. If I come the next 1 month, on the next 2 months, the milk and Milo that I have sold will become what? Cash. They will not become milk and Milo. Are we together? And that is by virtue of what? Selling them. So by converting them from Milo, from converting this Milo and milk by selling them, I've been able to convert them from Milo and milk, which is stock, to cash. This is a current asset and it falls under what? The category is what? Inventory. Inventory simply means stock. Things you put in your shop you want to sell. Those are your inventory. Depending on the nature of your business. If for instance you're into car dealership, the cars that you have in your car stand are your what? Stock. They are your inventory. Those are the cars you're going to market and advertise. And at the end of the day, after successful advertisement and getting a successful client that wants to purchase the car, that car will be converted from cash, sorry, from car, it will become what? Cash, depending on how much you decide to sell the car, maybe 5 million naira and above. But the point is you're able to convert that car from physical stuff of car into cash. So anything that can be converted from its physical state to cash is what? A current asset. Are we together? So you're able to convert it from physical stock, as the case may be, to cash. Is a current asset. Now let's talk about the types of current assets that we have. The type of current assets that we have. Let me clean this up. So we have you have your stock, as the case may be, which is your inventory, what you sell so that you can make money out of it. Are we together? E.g., your car, if you're into car business, for those that are into car dealership, e.g., your provision, depending on the business you're doing. Are we together? If you're selling lands, land is your stock. Are we together? Now, another important type of current asset that we have is your debtors, trade debtors. These are those people that have purchased things from you and they'll say they'll pay you later. Are we together? These are also another class of what? Current asset. Another class of current asset is what? Prepayments. Prepayments are advance payment, things you have purchased in advance. Like when you buy NEPA card in advance payment is a type of what? Current asset. In the sense that for the fact that, for instance, let's say you purchased NEPA card earlier on, or let me not use that as an instance, that will not give you what I'm trying to say. Let's say you have paid for car insurance earlier on. You intend to buy a car and said, okay, I bought a car, but I want to insure this car. You now go to the insurance company and say, Mansard Insurance, kindly insure this car for me. They tell that it will cost you 50,000 naira to insure the car. For instance, you now say, okay, let me pay 40,000 naira. Now, if the agreement that the insurance will start maybe say in April, it is agreed that from April 2026, Mansard Insurance will take over ensuring that your car is in good state. That is, in the case of any issue, they will take over. And then you have paid 40,000 naira. You pay this 40,000 naira in the month of, say, February. Are we together? That is when you made the payment. You made payment when? In February. But when will the insurance start? The insurance will start when? In April. Okay? So this is the commencement period for the insurance. It will start what? In April. Now you have paid in advance. If for any reason you need cash and you don't have cash and you go to meet Mansard Insurance, say, Mansard Insurance, I paid you this 40,000 naira, but I have an urgent need for this money. Because the commencement period of the insurance is in April, you can go to Mansard Insurance even though we're in March and say, Mansard Insurance, I want my 40,000 naira back. Because the commencement period of the insurance starts in April, they have an obligation to give you this 40,000 naira. So this 40,000 naira is still your cash. So that is why this could fall as a type of what? Current asset, because you can convert it into cash. Are we together? Though depending on the time frame for the conversion, maybe Master Insurance have a policy maybe 1 week. Do you understand? But let me explain to you that prepayment, things that you pay in advance, that the agreement policy for it to be used for in case of insurance I have not reached. You can go and say, give me my 40,000 naira. They'll give it to you. They'll give it to you. Are we together? Now, another example of current asset is your cash. This is the most liquid of it because it's already cash. When we say liquid, I mean can be converted into cash easily. You want to hear the term liquidity, it means cash. Ability to convert this into cash. Are we together? That is what? Liquidity. So these are your types of what? Current assets. And in accounting, we record current assets in our balance sheet in order of liquidity from the least to the most. The least being stock. Because if you're going to sell stock, it will take you a while to sell your inventory. You would have to advertise it, talk to the people, depending on the kind of business you're doing. Some businesses might be converted into cash quickly, but in accounting, this is the flow of liquidity. This is the least liquid and this is the most liquid. When I say liquid, I mean cash, converted into cash. So this is what we have for current assets. Now we also have non-current assets. And so I'm going to help us and write the types of non-current assets that we have. Now, non-current assets are said to be non-current assets because it takes more than 1 year, more than 12 months for it to be converted into cash. That is why we call them non-current assets. So they bear the term non-current simply because of it takes what more than 12 months to convert them into cash. So anything that you have and it takes more than 12 months for you to convert it to cash is a non-current asset. And so examples include things like our equipment. When you have your laptop, for instance, they have a lifespan. Sorry, not converted into cash. They have a lifespan, not converted into cash. It's not a shop. We don't intend to sell it. So it's not conversion. They have a lifespan of more than what 12 months. That is how long it can stay. Are we together? Lifespan is not converted into cash. Sorry, that is the wrong definition. Lifespan. I need to put some ink in this pen. They are a bit down and I want us to see clearly. So just kindly excuse me for 1 minute. Okay, this seems to have enough ink. So this might serve us. So they have a lifespan of more than 12 months. Example, equipment, things like a computer. The computer you use in your office. Computer lasts for more than 12 months. Most good to computer. If you buy a good computer, you have a lifespan of more than 12 months. Are we together? Another very good example of non-current assets are your building. If you purchase a building with the intention that you're going to use this building and then you're going to do your business, that building have a capacity of lasting for more than 12 months. Are we together? Is also an asset. Another example of an asset is what a land. If you buy lands with the intention that this land will last for a very long time, you can sell the land if you want to. But the most important thing about non-current assets that have a lifespan of what? More than 12 months. And you're not purchasing them because you want to convert them into cash. No. You're purchasing them because you want to use it as a means of keeping your wealth. So it's an asset. So if perhaps tomorrow anything happen, you can sell the land. But the intention of why you have purchased this land is not that you want to sell it. That's not your intention. The intention that you want to use it as a form of keeping your money, as safeguarding your money. You want to keep it. That is why you have purchased the land. It's not that you are buying land because you want to sell it, that tomorrow you will need money. No. In an accounting, under non-current asset, land that are being purchased by the business is that the business have hope to maybe use that land to build structures for their building. But until they know that they're going to sell that land so they can make money. No. A businessman that buys a computer doesn't intend that that computer I've purchased, I'm going to sell it. No. He has purchased this because he wants to use it for the business. So all these are assets. They are used to create wealth for the business. Are we together? They are used to create wealth for the business. Are we together? So you can see that it still falls into the definition of an asset because their aim is they're going to use to create wealth for the business, to create what? Economic benefit. If you have a laptop in your office, you're using that laptop to work. To work. Use that laptop to work, to do your work. And because you're able to do your work very, very well, maybe on Excel or MS Word or PowerPoint or whatever um computer app you're using it to work. You use this equipment to work. At the end of the day, because you have this equipment, you're able to earn money. If a client brings in something for you to type, for instance, unless you're into, say, typing business, equipment is one, laptop is one thing you're going to buy for your business. If you don't have a laptop, where are you going to type the work for your customer? Are we together? So things that you purchase to use in your business to enable you to create wealth, to enable you to do the work is what? Non-current asset. Example is what? Equipment. And our computer is an example of what? Equipment. You have your fan, it's also an equipment. If you have fans or AC in the office, even generator, are we together? All these are equipment that are helping you create wealth. The fan you have is to enable you keep cool. You have a fan in your office and the weather is hot. The fan is helping you to keep cool. When your brain is cool, you can work better. But if everywhere is very hot and you don't have a fan to keep you hot, to keep you cool, my sister, my brother, your brain might not function at its maximal capacity. Even your customers that come to your shop, they will not feel cool. They will say, "Oh God, yeah, it's very, very hot." So having a fan, having an AC, all these things are helping you what to create wealth. Because your environment is cool and calm, customer walking, they feel relaxed. They'll say, "Ah, Mister, please help me type this thing in 4 pages." Because your environment is cool and calm, they will sit down properly, relax themselves, and be patient. If you don't typing, you charge them, you pay them, they pay you, and you go. Are we together? So these are examples of what non-current assets, and they must have the characteristics of what asset that I said earlier on. You can see they're all able to produce economic what benefits. You're able to use the building to create what economic benefits. If you're in a building, the building is your building. That is your space for the business. You're not paying for rent, for instance. Why? Because the building is your office space building. Using that building to work to create wealth. That is the place where you do your business. People come into your shop, they come into your place, and because of the place they can locate you. If you're not in a space, where would they see you? You understand? So these are examples of what non-current assets. And if you ever ask and you have so many options, you ask which of these are current assets or non-current assets, use this definition that I'm giving you to know, okay, this is current asset. Anything that has a lifespan of 12 months and most likely can be converted into cash within 12 months is what current asset. While the ones that have a lifespan of more than 12 months and they are used to create wealth, you are having them not because you want to convert them to cash, but because you're going to use them to do your business. They are what non-current assets. Hope we are having value for our time. Please kindly subscribe if you're making, if you like what you're seeing, if you feel you're learning something, encourage your baby girl. All right, now we'll talk about liabilities. Okay, that is the next thing. We're talking about classes of assets and non-current, sorry, assets and what liabilities. So now let's talk about our liabilities. Now, what is a liability? I will use the scenario of a woman also. Most time when men want to marry, they'll say, "I don't marry liability. Don't marry basic." Basic means debt. When you marry a woman that maybe is owing so many people, I'm not saying men are like that, I'm just going to create a scenario. So if, for instance, this particular woman has bought things everywhere, she has bought bags from Gucci shop, from here, she has bought shoes everywhere, and she has not paid. And you, as the intending husband or the guy that's either, you have not inquired from her, and you just say, "I marry you." When you marry that woman, you know that you've married the person she's owing. So everybody she's owing shoes and bag because she has borrowed on credit. She bought on credit. She did not pay. It is what a liability. So you have the husband, you bought what liability. That's just in the light it. But liability simply means debt, an obligation owed, money you're owing. Sometimes it happens to anybody. You can go to a shop to buy something, and for one reason or they don't have actual cash at that time. If you say, "Ah, madam, let me buy this coke, I will pay you what later." It is what a liability. So anything you're owing anybody, as long as it's money you're owing that person, as a result of an agreement, though, there must be an agreement. You say, "Ah, madam, I don't have money now. I'll pay you this coke in the next what, say by Friday." You have discussed with the woman. The woman have said yes. So there must be what? An agreement. And by virtue of that agreement, you are obliged, you have an obligation, you are compelled. You have no other choice per se, in the sense that you have a responsibility to pay that woman the money for her coke when Friday reach. As a result of what? An agreement and a transaction that what occurred. So because you purchased coke maybe on Monday, you are obliged to pay the coke woman her coke by what? Friday. That is why we say a liability is an obligation as a result of what? An agreement due to what? Past activity. It happened in the past. You purchased the cookware on Monday and you told this woman, I'll pay this soap I'm owing you by Friday. You must have agreed first of all before you put the soap in your mouth. Because if she was not agreed, for instance, and you now go and buy the coke, she might just use e-way and hit your head. Just joking. But I'm trying to say that obligations that you are owing occurs because of what? There was a transaction that occurred when in the past. It can be last week. It did not occur today. It occurred when in the past. Anything that falls within this characteristic was a liability. So a liability is what? An obligation, a responsibility due you. When you're responsible for something, it means you are liable. A responsibility, an obligation, you are obliged. You have a responsibility to fulfill payments. You're owing somebody money as a result of what? Past transaction. Something that happened, even if it's yesterday in the past. So anything that reach this that fits this characteristics is what? An obligation, is a liability, is a responsibility or an obligation as the case may be to fulfill a payment. Oh, you're owing a person as a result of what? Past transaction. Are we together? So that's what a liability is. So if for instance they give you a list of things and you're not sure, ah, is this a liability or an asset? Ah, is this what did it happen in the past? Okay, it happened in the past. Okay, am I obliged to pay? Do I have a responsibility? Am I compelled? Am I responsible? Do I have to pay? You understand? If once you miss these characteristics, you know that that is what a liability. Are we together? Now let us talk about the types of liability. Now there are two types of liability, just like we have in our assets, current and non-current. Excuse me. We have current liability and what? Non-current liability. We have current liability. Now a current liability is a liability that fit those definitions I gave earlier on. Liability. But in addition to that, it is what is due within what? 12 months. So meaning you're obliged to pay within what? 12 months. So within 12 months you must pay. Within 12 months you must pay. Self payment, yes. Within 12 months you must pay. So if for instance you are into business and you went to meet the person supplying you provision, let's say his name is Mama Bisi. You are agreeing with Mama Bisi that Mama Bisi give me some packs of Milo and she gives you. You have an agreement that you pay her by the end of what? December. So let's say you went to her shop in January and she supplied you what? Packs of provision. You now told her, Mama Bisi, please, I don't have this money, but as I'm selling the business, I'll be giving you your money. But unfailingly, by December, I will pay you all the monies. This is what a current liability, because you're obliged to pay her all her money by what? January, by December, and that is 12 months. From January to December is 11 months actually, but the point is that it must be within what? 12 months. So even if it's lesser, so 12 months or less, this is less, is what a current liability. So another example is the bank. You went to Zenith Bank and say, Zenith Bank, I want to start a business. I need a loan of what? 1 million naira. Then the bank says, okay, no problem. But you're going to pay within what? 6 months. And you say, okay, no problem, I can do that. You ask for other documents for them to be convinced actually. And as long as within 12 months, as is less than 12 months, as the case may be, it is what a current liability. So any obligation, any debt you're expected to pay within 12 months or less than 12 months is a what? Current liability. So examples are like your trade suppliers, those that supplies you item on credit, or a bank loan as the case may be. As long as it's within 12 months or less than 12 months is a what? Non-current, is a current liability. Are we together? Now, a current liability, sorry, a non-current liability is any payment that is expected after 12 months. So, as long as it's more than, which is less, this is greater than, my ink is not too, just give me a second, let me add something. Okay, this is good. So if it's more than 12 months, it's more than, this is less than, it's more than 12 months, it is a what? Non-current liability. Any payment that is more than 12 months, you've agreed to pay the bank. Let's assume you borrowed money from the bank in what? January 2025. And you told the bank, or rather you agreed with the bank, that I'll pay you this money in 3 years' time. So you went to the bank in January January 2025 to borrow 5 million naira, and you agree you're going to pay them back their money after 3 years. It is a what? A non-current liability. Why? Because it's more than what? 12 months. You agree to pay them. I'll pay your money after 3 years. It's a non-current what? Liability. Then you can also have tax. You can be owing tax payments, and then you go to the tax authorities and you discuss with them and say, the way my business is doing now, things are not doing very well. I will pay you after 12 months. Okay? That is a what? Non-current liability. So we call this deferred tax. You have pushed it forward. You could not pay me this year. You say, okay, I'll push it, I'll pay it next year or next year. Or you're owing them. You can also owe your staff. When people owe their staff for one reason or the other, businesses might not be doing as well as you expect them to do. And staffs have worked for you. You had an agreement to pay them. And then unfortunately, the business did not do like you expected. And they have worked for you. You have an agreement with them and say, Mr. A, Mr. B, I agree, I owe you 10 million naira or 1 million naira, the case may be, but I'll pay you this money in 2 years' time. You can have salary that you're owing, but this is very rare. Most time when you have salary that you're owing, it happens within 12 months. Nobody will want to wait until after 1 year for his money, no, after a month or two. A normal typical person will say, pay me now. They never pay me now, maybe a month or 2 months. So you don't have the instance of deferred or rather non-current liability in the case of salary. You have this in your current liability. That is where it's very, very possible. No employer will say I'll pay you in 2 years' time. I've not seen actually. I don't think there exists. And even if it does, in accounting, what we recognize as non-current liability are things like loan. That is the normal places where you see a bank allowing a business owner and say, okay, yes, pay me after 1 year. No employer will do that. To the best of my knowledge, it's possible it exists, but the common examples you see for non-current liability are things like oh God, sorry, things like what? Your bank loan. So that is the typical example of what? non-current liability, and deferred tax payments. Are we together? Okay, I don't want this video to be very, very long, so I'll be wrapping it up very, very soon. But before I wrap it up, I want us to do a very short assignment. I'm going to list some items for us, and they're going to classify it for me and tell me which is current and which is what non-current, as the case may be. So we have, so I'll say kindly classify these items respectively. So you tell me, when you have your cash, where does it fall? Which class does it belong to? When you have your building, which class does it belong to? And when you have your trade debtors, let's just make it very easy. Your trade debtors, which class does it belong to? Is it an asset? If it is it a current or non-current asset? Is it an asset or a liability? Are you together? Is it an asset or a liability, and is it current or non-current? So you've answered. This is question A. Is it asset or non-asset? Is it asset or liability? Now is it a non-current? My barriers are, I'm sorry about that. Is it a non-current asset or current asset? Or is it non-current liability or current liability? So these are the three scenarios, and you would help me figure it out. We've come to the end of our class. I'm so happy to be here. I believe you have learned something today. If you have, kindly give this video a thumbs up. If you have any questions or any areas you're not clear about, just leave this for me in the comment section below. And I'll see you in my next class. Don't forget to subscribe and like and share this to other accounting pupils or students that you know need accounting to help them do better in school. I'm here because I love accounting. I have a passion for it, and it is my desire that you understand what has been taught. I wish you all a very beautiful and a blessed day. Remain blessed and know that God loves you. This is from me to you saying bye. Mwah. Okay.